Hello, this is Dennis Herman from Easy One Realty here out of Menominee Falls, Wisconsin. This video is going to cover local real estate investing. Local is the key to real estate investing. It seems new real estate investing gurus are popping up all over the internet these days, offering all kinds of advice. Well, we all know what advice is. Advice is like something we all have. But how do you separate the good advice from the bad? It's a simple process of just identifying the hype. Most of the online videos make promises way beyond the imagination, but are promises advice? You'd have to determine that yourself. The next obvious question to ask is, where is this person operating from? And in most cases, these real estate investors are taking you up some upper class marketing places on either the East Coast or the West Coast, claiming you can buy this house and it's $1 million mansion, blah, 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 the whole bit. You got to kind of look at this with, open eyes. Number one, it's going to be impossible for you to verify the information they're giving you because it's outside of your market field. The most important aspect, the most important factor to real estate investing is knowing the market you're investing in. Why in the world would you want to take advice from someone that has never seen the market and knows absolutely nothing about the market that you're going to invest in? They've never seen the properties that you're looking at, but yeah, they give you advice on it. That doesn't make any sense. It makes as much sense as, buying a super gaming computer from a guy that sells cell phone plans. You're never going to get what you're actually looking for. Rule number one rule of real estate investing is know the market. How do you know the market? Well, there's a couple of markets you're already pretty much aware of. Number one is the neighborhood that you grew up in, and number two is the neighborhood that you live in. People have a tendency of knowing, what's going on in the neighborhood, and that gives you a sense of security. Another way is I send out automatic updates to all my customers, investors and private customers that are looking for owner occupied, and that way it gives them the ability to track pricing and information over a period of time. It gives them information that they know. They can tell if prices are going up, if they're in a decline. And one of the things I always do before writing an offer is to send them an update on the actual market. Let's take a look at what the prices have done in the last 3 months, 6 months. How many foreclosures are in the area? What kind of competition are you looking at? Basically, if you just take a look at the Milwaukee area, there's been some places in the Milwaukee area that have seen substantial price increases in the last half of 2012, while other places just a mile away or a couple of blocks away are still in a decline. If we look at the Menominee Falls area, the lower priced homes in the Menominee Falls area between 150 and 175,000 have actually seen moderate increases, while the top range from $350,000 on up are kind of in a state of flux. Some neighborhoods are increasing, other neighborhoods are stabilizing. You can still see a little bit of pushing down of prices in another neighborhood. So you got to know the neighborhood within a couple of blocks of what you're investing in. As a general rule of thumb, investing requires cash. Many people are following this word-of-mouth advice and these internet gurus that show you for $10,000 you can buy a house, slap on a little bit of paint, put in new carpeting maybe, and then you resell it and make $100,000 profit. Well, if it was that easy, everyone would be doing it. It's not that simple. Sale prices on foreclosed properties, you have to understand, are set by highly trained individuals. These highly trained individuals, they know the market. That's what they do 8 hours a day, 5 days a week. They take a look at market prices, they track market trends, they've got computer programs, they've got all this stuff. So you're not going to be pulling the wool over anybody's eyes. You know, that's a fallacy. Get it out of your head. $100,000 profit on a house. Yeah, well, maybe if you buy a foreclosed $500,000 mansion that only requires a little bit of work, you get in there, clean it all up, maybe you can sell it. Maybe you make $100,000, but it's going to take you $300,000, $400,000 to get into that market. And if you don't have that, let's set your expectations at realistic figures. You got to set yourself at realistic goals. Don't think you're going to be entering the market with little or no experience or absolutely no training and make the deal of the century. You only wind up wasting everybody's time. You need a plan. Without one, you're never going to close your first real estate deal. Real estate investing is loaded with competition. Seasoned investors know the neighborhoods. They know the best neighborhoods to invest in. They are quick to go in, go through a property. They can estimate costs quickly. They know how to bid. They work on a schedule. They shop, they purchase, they rehab properties like clockwork. They have an organized team of contractors. Many of these investors are also licensed contractors themselves. They work closely with a team of licensed contractors that are able to complete the job on time and on budget. They learn all of this through experience. They also know how to deal with city ordinances regarding real estate. You got to be realistic about it. If there's a way of making money in a business, the city's going to have their hand in the pot. When investing in real estate, make certain you never get in over your head. Choose a project that's within your means. If all you can do is painting and order some carpeting, go to the store, pick it out, have somebody put it in for you. Stick with that and keep your profits within reason, acceptable limits. You want to study the sold prices in the area you're investing in. Like I said before, I send out a whole list of active and sold units in the area. This will tell you, number one, your best purchase price. It'll show you where you need to bid on this. Number two, it'll give you an idea of what the selling prices are in the neighborhood, so you can estimate, take together, put all your costs together, and do an estimation of what your profit range is going to be. Now, how to get started? Well, actually, one of the best places to get started is your local qualified real estate agent. He may be your best asset. Most real estate agents have worked with a number of seasoned investors. First, it's a matter of knowing how much you're able to invest. What kind of property, what kind of investment is going to fit your budget. There's a way of accelerating that process. It's by working with local investors that provide short-term loans to real estate and other real estate investors. There's a whole team, there's a whole network out there. It's already established. But you want to deal on a local level. You don't think these people are going to be willing to loan their hard-earned money without knowing the local market. You have to have a plan. You have to have the expertise. You got to go in there and sell yourself. You're never going to pull the wool over their eyes. I mean, these people have made, enough money that they're willing to loan you money now on real estate investing. So you're not going to fool anyone. You have to have a plan, and it has to be in writing. I'll be discussing more of using local private funds for real estate investing in another video, so stay tuned for that. This one is just basically going to concentrate on preparation, knowing your limitations, and keeping track of realistic expectations. Typically, an investor should set their goals on setting a target to make $10,000 profit on a typical investment. There are a number of factors to consider. Your purchase price, your repairs, your resale cost, including commissions, your taxes, and your closing cost. Once you put all these together, you can work out a budget. Estimating, that's in your field. You know, you have to be the expert at that. Don't be surprised or upset about real estate commissions. Real estate agents make very little money on buying the initial REO property. Basically, when you take into consideration the time, the gasoline, the office fees, the license fees, and everything that we got to pay, we're actually investing in your future too. Very little profit, and a little bit of profit we make doesn't even really pay the bills. As a typical example, what we're going to do is take a typical example here in Milwaukee area. Right now, prices for good investments are set right at about the $60,000 price range. And let's just say there's going to be $20,000 of repairs. You estimate in another $10,000 with a closing cost, which includes commissions, and that's usually an overestimation, but you always want to overestimate everything at the beginning to take care of little incidentals that come up, unforeseen difficulties is the technical term. So on this particular market, a $60,000 purchase on an REO foreclosed property, once it's all fixed up and it's turnkey, the typical selling price right now in this area, in that particular area, would be about $119,000. So you're looking at adding it all up. You got $60,000 purchase, $20,000 worth of repairs, another $10,000 in closing cost. You're up to $90,000. Another $3,000 in property taxes. You're up to $93,000. Selling it at $119,000. What does that give you? A $26,000 worth of profit. But you always have to consider the competition. You have to keep your eye on the competition. There's other investors in that area, and they're trying to sell as fast as they can, get their target profit, and get on to the next one. So you have to compete with three classes. You have to compete with the private seller, who's usually pricing a little bit high. You have to compete against other investors who are going to be at the bottom of the market price. And you also have to compete with other foreclosures in the area. So you want to pick an area to where you don't have to compete with a whole lot of foreclosures. We'll cover that in a second example. What you want to do is set your goals on netting your $10,000 profit. The goal is to purchase a property, remodel it, and sell it in 3 months. You want to set up a time frame. This way you can do 4 of them a year. This will give you the potential of earning between $40,000 and $60,000 a year. And once you provide enough profit, you can begin working on 2 properties at one time, and this will increase your number of units to 6 or 8 units a year. It's not impossible, but it takes considerable planning and organization. As a comparison, we can look at a $15,000 purchase. I mean, that's everybody's pie in the sky kind of attitude that I'm going to, pick up this $10,000, $15,000 property. Okay, in these particular market areas where they're available, the resale values are between $30,000 and $38,000. These areas tend to be saturated with foreclosed properties. Buyers that are shopping in these areas are looking at all the foreclosed properties. They're also looking at the $10,000 and $15,000 properties too, and they're going to be a tough sell because they want you to drop your price with a turnkey property that has everything in it down to, how come you're asking so much for it? They're going to think you're an idiot. I mean, it just comes around and goes around. It's just, buyers always have this strange attitude. You have to learn to deal with it. Repairs on a $15,000 property are still going to cost $20,000 or more. Closing cost will probably be around $5,000 and taxes around $2,000. So what do we come up with? They got $15,000 purchase, $20,000 repairs. We're up to $35,000 already. Closing costs another $5,000. You know, all of a sudden, boom, we're up to $40,000, and taxes around $2,000. So we're looking at $42,000. The selling price is between $30,000 and $38,000, and now all of a sudden you're behind the 8 ball trying to figure out, what do I got to do to sell this thing? In these particular areas, there's so many foreclosures because there's so many investors jumping into them, thinking they're going to wind up selling it for $50,000, $60,000, and they just can't, and they're foreclosed again. And you wind up buying a place that's halfway fixed up, and you still got to stick all the money into it. In these particular areas, you have to look at making a profit of $4,000 to $6,000. It's a start, but low-end buying, it's just going to take a lot longer for you to achieve your goals. It's just the basic law of marketing. If a property is offered at $15,000 in a market where the resale value is $100,000, you're going to have every single investor that's going to be bidding in on it. They're going to be submitting offers. They're going to be outbidding one another. And the reality of real estate investing is nothing at all like what you see on the videos and the seminars that are filled with hype and pipe dreams. It takes cash, it takes hard work, it takes planning and determination to make a living in real estate investing. Like I said, in a later video, I'm going to cover obtaining hard money or private money loans from a local private investor. Once again, this is Dennis Herman from Easy One Realty. Cell phone number, if you have any questions, you can give me a call, is 414-426-1784. Once again, that's 414-426-1784. And my website is easy1realty.net. Hope to hear from you soon. Hope to get some people that are really serious into investing, into real estate investing, and rebuilding this economy. If you have any questions, feel free to give me a call.